All right, guys, again, I want to welcome each and every one of you to the webinar. This is our Slash Your Taxes Now webinar. As everybody, guys, that's around have to pay taxes, and we are paying more money in taxes, guys, than any of our expenses. If you get together with your family and you start to add up your expenses at your home, whether it is home, your utilities, or whatever it is, all of your expenses at your home, guys, you can add it up. And once you add that up and the total that you get with all the expenses in your home, I can tell you, you are paying more in taxes yearly than those items. That's how much we pay in taxes. But we forget about that sometimes because we only look at what income taxes. We only look at it from that January through that April the 15th deadline. But guys, all around, we pay a lot of money in taxes. You know, sales tax, you pay something every day, gas tax, property tax, okay? You pay a lot of different things in taxes. So taxes should be one of the major things that you and I would want to reduce. We would want to reduce that dramatically, okay, is taxes. And that's what we are going to talk about today, how you can do that. But before we really get going, let me introduce myself to everybody for those that do not know me. Okay, my name is Terrence Hawkins. I am the CEO and founder of Hawkins Accounting and Tax Service here in Charlotte, North Carolina. I have a little over 27 years of experience. Guys, I started doing taxes when I was 15 years old. My father has been doing taxes all my life, and you know, at 15, I wanted to actually purchase something, and instead of him giving me the money, he gave me a tax form, and one of his clients' kids, you know, that worked at one of the fast food, he gave me their W-2 and told me to go into the other room and kind of figure it out. Of course, I came back. It was totally wrong. when I did it, it was totally wrong. But then he corrected those things in front of me, and then he gave me another W-2 and those tax forms that go in there and figure that out. Came back a little bit better, but he continued to do that, guys, and he taught me how to do taxes when I was 15 of age. Currently, right now, my wife and I have been in business for 19 plus years. We are very, very excited about that. We have basically educated over tens of thousands of individuals and helped them to save millions of dollars in taxes. We specialize here in the home-based business area because that is indeed your biggest tax deduction. And that's kind of what my dad taught me way back then. He said, son, your tax laws are written for business individuals. That was written for business individuals. And he started to teach me, when you look at all of the different tax breaks that's out there, it's written for what? People that have a business. That's what it's written for. And it's in good reason, so that what? The economy can go round and round. You know, give the businesses tax breaks and hopefully that they can hire individuals so things can happen, okay? Things can happen. And that's a good thing. But we want you to have some of those same benefits. We want you to have some of those same benefits. And we want you to understand this. If you do not have a home-based business, you are paying way too much in taxes. That is the bottom line. That's the bottom line. If you don't have a home-based business, you are paying way too much in taxes, okay? Guys, Congress has approved major tax breaks specifically for those who have a home-based business. Major tax breaks specifically for those that have a home-based business. And some people have to start to think, why did Congress do that? Why do they want to give individuals a tax break? Well, here's what it's really designed for. What it's designed for is Congress is basically saying, hey, if the economy gets really bad again, because this happened, you know, during recession time, guys, and the economy gets really bad, they want individuals to have something that they're doing part-time. Even while they're working their full-time jobs or full-time businesses or whatever that they're doing, they want individuals to have something part-time as a home business or trade, anything that they was doing, with hopefully that if things got bad, if things was worse, that they can move that part-time into a full-time income. They want them to move their business into full-time instead of them going into the unemployment line. That's just the bottom line, you know. So they gave major tax laws and written major things specifically for home-based businesses. Guys, they drew up hundreds of tax deductions for specifically for home-based business, okay? But here's the thing. Even though you may say that you have a home-based business or want to have a home-based business, you must qualify for them. If those of you are taking notes, you definitely need to take notes of these 3 points here. You must qualify for them. The 3 things that you must do to qualify them is, number 1, you need to have the intent to produce a profit. The intent to produce a profit. You can't just say that you have a home-based business and you're never trying to make money. Businesses are in businesses to do what? Make money. So you must do your business with the intent to generate a profit. Now, it doesn't say that you have to make a profit, but you have to have the intent to generate a profit. That's an important point. You do not have to necessarily make a profit, but you do have to have the intent to generate a profit. Congress even actually put something down in the IRS they call a hobby clause. Basically, if you do not generate a profit 3 out of the 5 years, okay, they can deem that as a hobby because you're not showing the intent to generate a profit. So the first criteria, you need to have the intent to generate a profit, okay? The next thing that you need to do, you need to work your business, your home business, on a regular and consistent basis. Again, you need to work your business on a regular and consistent basis. Now, what in the world is regular and consistent? Regular and consistent, guys, is around 3 hours, 3 to 5 hours a week on average. Not saying that you have to do 3 to 5 every single week. You have to average out at the end of the year that you can prove to the IRS that you did put some time and effort into your business. You did do 3 to 5 hours on average a week, okay? And here's the last one, and this is the one that's very big now that we're telling all of our clients about. It's absolutely huge right now, which is keeping the good records. You see, in order for you to really claim those expenses, especially the ones that we're going to go over, you have to have good record keeping. If the IRS comes back and they do that thing that people can't stand, which is audit you, okay, they want to see some record keeping stuff. They want to see some record keeping stuff. And if you do not have good records, they can turn down all of your expenses that you claimed in that business. And you do not want that to happen. So this is the most important one, guys, because several years ago, the IRS hired 16,000 new agents, and they're starting at Schedule C home businesses as far as auditing. So we want to make sure that you understand you need to have good records. Now, if you had the intent to generate a profit, and you're working your business on a regular and consistent basis, and you're keeping good records, and guys, we can teach you with the good records, we can teach you how to keep good records only with 3 to 4 minutes a day. That's right, 3 to 4 minutes a day in good records. If you do that, you can utilize those laws with a home-based business. Even though there's a lot of laws, that's 100+ laws, you do not have to know all of them to save big. All you need to know is what we call the Big Six. The Big Six, okay? 6 deductions that would save you $3,000 to $6,000 on average with most people in taxes per year. Now, that really is going to depend on your income. It's going to depend on your income that you make. Individuals that's making more money, higher income, that got a higher tax rate, they're going to make a whole lot more than that. I was talking to young lady 2 weeks ago, and just one of the deductions of those 6 was giving her back $5,000 in additional tax savings. Absolutely huge, okay? But the average is $3,000 to $6,000 in that. Guys, you should now be thinking, I want to know those 6 deductions. I want to know those 6 deductions that I have to focus on to basically save $3,000 to $6,000 in taxes. And that's what we're getting ready to go over. So get your pen and paper out together so you can take some notes. And again, if you have any questions during the chat field, please, sir, please, ma'am, go ahead and put that in the chat field as well. We're going to start out by talking about your home. We're going to start out by talking about your home. You know, since it's a home-based business, I want to talk about your home. Okay, your home is your principal place of business. This is where you have your business at. And the IRS is basically saying you need to have a specific place in your home to conduct business. Now, it doesn't have to be a whole room. You know, it can be a whole room. It can be a whole floor, okay? But it has to be exclusive for business. So if you have an area, whether it's a room, whether it's, you know, just a little area, okay, that has your computer, got your fax machine, you know, whatever it is, You can basically have a percentage of that area to go against a percentage of your entire home. And that percentage of that area then can lead you to a lot of deductions. Why? Because you get to write off those things for your business. You see, having a home office can allow you to convert thousands of dollars worth of normal non-deductible business expenses into tax-deductible business expenses. Again, things that you're already paying on at your house, in your house, you can change those from a non-deductible business expense into a tax-deductible business expense. Some of those things are your portion of your mortgage, a portion even of your rent. You don't have to own a house. You can be renting a portion of that as long as you got a space that's designed for your home-based business. Heating, air conditioning, electricity, natural gas, even your oil, your water, your sewer, even trash collections. People say, how do you do trash collections? It's easy. If you have a trash can or trash recycling in your office, in your home office, like I'm sitting here now doing the webinar in my home office, and I got one right here, if you have that, boom, you can do what? You can write out that. Yes, Sheila, if you have a little recycling bucket in your office, you can write off. The key is, okay, with individuals that I'm paying for to come into my trash collection, they have to get the one that's in my home office. Because I have a trash can in my home office, I need somebody to come and pick it up, and now that's a write-off. Because I have a recycling unit in my home office, whether I got my bottles and I'm drinking up and I put it in there, I can write it off as well, okay? Right? Homeowners Association dues. Now think about that for a second, because just without a home-based business, you can't write off those dues. But with a with a home-based business, you can. House cleaning, a portion of your house cleaning. If you are hiring somebody to come and clean your house, well, they're going to clean your entire house. A portion of your house is your home office. Exterior painting, where the exterior painting on the outside of your house, a part of the outside part of your house is what? Your home office. Your security alarm. You're not just protecting your home, you're protecting your business. Maintenance costs, home repairs, and much, much more. All of the furniture that's in your business, in your home, in the business, is a write-off. 100% write-off there. So with this right here alone, can save individuals thousands of dollars by doing what you're currently doing now. So already, if you have a mortgage or if you are renting and you do not have a home-based business, you're missing thousands of dollars in deductions just in this alone. Just by setting up a home business, you're missing money because you're not doing anything different. You're doing the same things that you're always doing. You're spending the same money that you're always spending just to live in your home. Why not turn a portion of that into a business expense? That's the first one, okay? But let's talk about the second one, because some of you might have known that. So I'm going to throw in something that some of you guys may not know. And this is a big one. This is one I really love. This is called hire your own children. It might not work for everybody, but those of you that's on the webinar on the line right now, if you have a child that's in between the age of 7 to 17, okay, 7 years old, and they have to be at least 7 and no more than 17 years old to basically do what I'm going to talk about right now. Because those individuals can work for their parents in their home business. It has to be either self-employed business or LLC, parents-only ownership, or C corporation to take this deduction. Now, if they do that, guys, you can hire your own child. And whatever they do the work for you, you need to do what? Pay them. You need to pay them. And we can show you how to set all of this up. But you can pay your child, as of last year, it was up to $6,200 a year. So think about this for a second. You can pay your child up to $6,200 a year. Somebody's saying, I'm not taking an extra $6,200 a year to pay my child. But this is what I'm saying. You pay them $6,200 a year. You get them their own bank account. Get them their own bank account, and every month or whatever, time that you're going to do the payroll, do a consistent time, and you're going to pay them or put that money into their account. You're paying them. And because you pay them, And because they're working for you, the home-based business law states that because they are in between the age of 7 and 17, they do not have to pay taxes on that money that you pay them. They do not have to pay federal. They don't have to pay state. They don't have to pay Social Security nor Medicare. Total tax-free income that they get to receive from their parents with a sole proprietorship, LLC, one person, okay, or C Corp, that they can basically take. When they actually take that, you get to write it off as a business expense, and they do not have to claim it. So what can they do? Well, they can do whatever they want. It's their money. So if they need to buy their clothes for school, they use their own account. If they have to go on trips for school, they do their own account. If they have a meal plan for school, they can use their what? Own account. No more does it have to come from mom and dad's account. It can come from their account. If they have AAU fees, playing sports during the summertime, they can write off theirs. How about camp? They can pay for their own camp if they want to camp. Now notice, most time in the camps, especially if a child is 14, 15 years old, they don't have any more child care expenses or camp fees or nothing like that they can write off, right? Well, if you had a home-based business and you have your own child, they can basically take a portion of that $6,200 and pay for their own camp. Now it's a write-off. I hope you got this deduction because this is absolutely huge with $6,200. And guys, this is per child. Per child. So I want you to think about those of you on the line that may have kids. Start even thinking about yours, but start thinking about other individuals that you know that may have kids. And then start thinking about how many kids do they have. Do they have 1, 2, 3? This is $6,200 per child that they can write off. This is big time deduction. That's as good as it gets, guys. That's as good as it gets. Let's continue to go on. I'm going to tell you actually another one here, okay? And this right here can be your biggest tax deduction, especially now. Can be your biggest tax deduction. The thing is, all healthcare costs for the entire family, all healthcare costs for the entire family, the entire immediate family, can be a tax write-off. Now, let me explain this for a second, okay? Because it's going to happen if you have, if you own your own business. You see, most other taxpayers can deduct what? Only healthcare costs that exceeds 10%. And what's 10%? That's that threshold that the IRS has, 10% of your taxable income. If your taxable income is $50,000 a year, that's $5,000 is the threshold. So the first $5,000 on a Schedule A, you can't write that off. You can't write that off. If you're making the six-figure income, $100,000, the first $10,000, you can't write that off. We don't actually tell our clients, normally because of the threshold, sometimes I say, hey, you don't want to be able to write off medical because that means if you can write off the medical that they have and using the threshold, that means that you had a bad year health-wise. You had a bad year health-wise. However, if you have a home-based business, there is a way that you can write off all of your entire family healthcare expenses, and we would love to show you how you can do that, okay? And it applies to all members of your immediate family in addition to you. But here's the thing. The coverage can include insurance premiums, your annual deductibles, your co-pays, but it can also do things that normal insurance does not do, like non-covered expenses, like your orthodontist, okay? How about your orthodontist there? It even includes, when you're talking about acupuncture and different type of natural or holistic remedies. Even this is big. If you have a doctor that's telling you that, hey, you know what? If you had certain minerals and nutrients that you can, it would help you to fight off things that you may have. Let's say you got arthritis, you got high blood pressure, you got diabetes, you got certain other things. And if this doctor actually said, hey, this nutrient or mineral or whatever that you can get, if you get it monthly, guess what? That can be a write-off as well, 100% write-off. This deduction right here on average, let me tell you on average, the average single family can find about $15,000 a year in write-off with this because they're not worried about the threshold. Not worried about the threshold. I just talked to a financial planner yesterday that came into my office, and they was talking about one of the biggest expenses that they're telling people about insurance right now that people forgot is as individuals get of age, and they need, stay-at-home care. A lot of individuals do not think about that. They may be disabled and need some stay-at-home care. And he was like, the average nail is like $7,200 a month in hair care, just stay-at-home hair care. Guys, that could be 100% write-off. 100% write-off, and we show you how to do that. But do you have a question? Is medical documents needed to approve the mineral intake? It's good to have a medical record, or if somebody actually said something. I know a lot of doctors do seminars, and they kind of, give you a particular thing to say, or if it's something on the website that says that, hey, if you had these types of minerals, that it'll help you to fight against, ABCD, and then your primary doctor said that you have ABCD. There's another physician that says that if you take certain things, it can help you to support, those ABCDs. You can then write that off. 100% write off. So those of you guys, and we have a lot of individuals that are in the healthcare industry, that is in the healthcare, anti-aging, that's in the home-based fitness arena. 100% write off. There's ways that it can be done. However, if you do not have a home-based business, you can't write that off. If you do not have one, you cannot write it. You're here to the 10% threshold, and you can only write off certain things on that Schedule A. Big deduction, a family of 4, average. I gave you the single family of $15,000. A family of 4, the average is $34,000 a year. $34,000 a year is the average family of 4 of what was being actually seen that they can end up writing off. This is huge money, guys. This is huge money. But let's continue to go on. I can almost stop right there because we can definitely save you a whole lot of money right there, but we're going to continue to go on. Number three, okay? Your biggest deduction just may be your vehicle. It just may be your vehicle. Now, a lot of individuals say, oh, yeah, miles. Now, this is one that you definitely need to keep records for, however. You need to keep records for this, and if you have a home-based business already, you're thinking about one and getting one, which I hope you do because you need one, is you need to put a couple of things down. You need to, keep records of the destination that you are going to, the primary purpose, and it needs to be a business purpose. Okay, you need to have the miles that's traveled, there and back. Okay, and at least at the beginning of the year, you need to write down, the miles that's on your vehicle, and at the end of the year, you need to track the ending miles of the vehicle, and you need to actually have those down. And guys, this can be done very, very easily. But here's the thing. A lot of individuals say, business deductions, this and that. This is one of the deductions that a lot of individuals that we talk to year after year that they are missing, because they're only thinking about if they go into a meeting or if they go into a client. The thing is, you can start making a lot of your miles, of the places that you're going, a business deduction. If done properly, you can do about 80% of your miles can possibly be a business deduction. Let me give you an example. Let's say that you so happen need to go to Walmart as an example, a store, Walmart. You need to go to Walmart, and you would normally probably go to Walmart just to get some groceries if you shop at Walmart, in this example. And guys, but instead, and then on another day, you may go to Walmart to get pen and paper for your business Excel, And you do those two separate things. You might write off when you go into Walmart to get your pen and paper. But here's what I want you to start thinking about. As you go to Walmart, even as you go to Walmart and you're thinking that you're going to shop, the business purpose is when you go there also to get something for your business. You may need trash liners for the inside of your business and your trash can at your home office. You may need a pen. You may need the paper. You may need banners. Whatever you need, what we're saying is you may be going there for a dual reason. One reason, you may be going to get some food. Another reason, you may need to go for what? Business. Well, the IRS says that you, as the taxpayer, can decide what the primary purpose of that trip is. You, again, as the taxpayer, can decide what the primary purpose of that trip is. So if you elect to go to Walmart and then to come back, even if you got, went full-blown grocery shopping or whatever, but you had to go to get your items that you need for your home office, for your business, the entire trip there and back home is a write-off. The entire trip there and back home is a write-off. That saves some people a lot of money there. Let me get you another one real quick. A lot of individuals say, hey, I can't write off the miles from my home to my job. I can only write off miles from my job to another job. That's basically called business to business, okay? You can write off miles from the business to another business. Well, here's what, can be done if you had a home business, a home-based business. Here's what I tell all of you to do. If you get up in the morning, get up about 20 to 30 minutes extra and go into your home office. Go into your home office, and you can check your schedule, check your emails, if you're in network marketing, check your downlines, check whatever you need to actually check, but do a little time, there, send out things on Facebook and all you're doing. Spend about 20 minutes into your office, okay? And then I'll just spend about 20 minutes in your office. Now you got to record it, and we'll tell you how to set up your office with calendar and stuff. You just write it down there, and then you have proof with the emails and things actually that you sent out. But then when you leave and you go to your, as what you would call your W-2 income job, you're now going from a business to business. Your home business, because you did at least 20 minutes there and working, is your first business. Now when you go into your primary W-2 income business, that's the second business. So now you can write off from your home to your W-2 income business, and you can write it off for your W-2 income business back home. Only if you can write it back home, only if you go back into your office when you get back home, you go into your home office, and you do about another 20 minutes or stuff. That'd be a good time to check your emails again and see who called you, make some phone calls. Some people do the conference calls, 3 ways, whatever you're doing. That's what you do. You just can't come back home and just say, hey, I'm just going to have a cookout. I'm just going to go ahead and cook, and I'm not going to do anything else on tonight. You don't write off those miles back home because you didn't go from business back to a business. You went from a business back home. But if you do some work, okay, and you wrap it, you can write off your miles to your W-2 income all the way back home. Now think about the individuals that basically have a W-2 income job. They're working 5 days to 6 days a week. And think about the travel time that they're doing with miles. The IRS gave us 57.5 cents per mile this year, 2015, 57.5. Think about that write-off that they can have. Average person, 12,000 to 14,000 miles in a write-off. Huge, huge money. I hope somebody actually got some good notes off of that one. The next thing that we're going to actually talk about, we're on to number 4, guys. We already saved a lot of money already. We're going to show you. On to number 4, family trips. Family trips, and here's the thing, if you plan them correctly. Family trips, if you plan them correctly. You see, guys, if you know the rules, you can combine business and pleasure. If you know the rules, there's certain things that you have to be done, okay, and recording it and planning it properly. But you can only deduct 100% of your hotel, 100% of ground transportation, 100% of your tips and gratuities, and 50% of your meals, all as a business expense. This is why when individuals do ask me, hey, Terrence, what type of business should I get and actually what's going on and all, I normally like to actually, look for companies that are, how they are in a lot of different countries, in a lot of different places. I normally actually like that. Why? Because if you're traveling all around the world and stuff, I had one client just actually a couple of weeks ago that they had to actually take a trip, and they took a trip to Italy. They was going to Italy, and because her home business is also in Italy, okay, instead of her just going for fun, she went to expand her business, and she can prove with the IRS. But because when she got there, she was able to get a lot of contacts while she was out there doing her business, did a lot of things actually while she was there, did some pictures, did some sample stuff while she was there, okay, and she got a contact, okay. Now, the cool part about it is, if she does have a person that does join her in her business, and she can really actually prove it in because that trip was worthwhile, okay? And the entire trip can be a write-off. So start thinking about places that you're thinking about going this summer. Just on your vacation, after school is over, and you plan on going on a trip, plan on going on a vacation and things of that nature, start thinking about that can end up being a business write-off if planned correctly. And, a great vacation, guys, is thousands of dollars, especially depending on how big that your family is. Huge benefits if planned correctly. And then the last one that actually we're going to go over, guys, okay, number 6. Now, sometimes people forget this. I have no idea why, but sometimes they forget this. The actual cost of running your business. The actual cost of running, there's a business, and That's business expense. Now, the rule of thumb, okay, is this. Any expense that you incur because of your business that you would not have incurred if you didn't have a business is probably deductible. Again, any expense that you incur because of your business that you would not have incurred if you didn't have a business is probably deductible. That's just a rule of thumb. Like your startup costs. Most companies have startup costs, 100% deductible. Promotional materials, product sampling, meetings and attendance that you attend, internet access fees, special phone services, okay, is a write-off. All right, fax lines, leads lists, website fees, 800 numbers, printing costs, briefcases, business cards, home furniture, and much more. Okay, all of that is a write-off. Even if your company has some type of monthly that you have to do as an auditorship, a portion of that can be a write-off as well. You got to be careful not actually with that, but up to a certain amount of that can be a write-off up to 100%. Okay, it's absolutely big, absolutely huge. So your active business, a lot of people forget that's a write-off. Now, guys, let's go over how this works. Okay. Let's go over. Sheila has, even this call is a write-off because we are having a scheduled webinar. Okay, that's right, Sheila. If you are already in the business, this right here on your webinar is basically the intent to generate a profit. Actually, you are actually participating as well as education is proven to the IRS. If you have it on your calendar, so those that do have a business that's on the line, put it on your calendar that you attend this webinar here, and that actually qualifies as well. Okay, let's put all of this stuff together. Let's put all of this stuff together and see, here's how all of this works so we can actually show you some numbers for what's going on home-based business. Okay, let's give you some examples. Let's give you some examples real quick. We talked about home-related business expenses, right? We talked about all of those different things of home-related business. And let's say that you ended up with $1,200 in home-related business expenses. Let's say that you're an individual that you have one child, and that's $6,200 in business expense. Let's say your family's non-reimbursed medical costs. Notice I put on the $8,000 there. I put on the $8,000, and notice I said that a single family averaged $15,000, and a family of four can get up to $30,000. We want to be very conservative here, guys. Okay, $8,000. Let's say your vehicle miles. Let's say 57.5 cents. Let's say I'm only just using 10,000. Let's say out of your 14,000, 15,000 miles you drive for the whole year, you can find 10,000 of those miles as a write-off. Okay, your business travel. Let's say you're going to business travel and stuff, and that's $2,500 in your family trip business travel. Okay, 50% while you're out there with meals and entertainment. $2,000. We show you how to do the entertainment there as well for business purposes. Okay, other deductions and your startup costs and your cell phones and your supplies and all of that, $3,000. Yes, I remember cell phones as well because you need that to have your business, because that's how people call you. They call you on your cell phone. That's a deduction as well. When we add those up, those conservative deductions up, that's over $28,000 in deductions. Now, we need to convert that into real tax savings because that's just your deductions, okay? Let's convert that to real tax savings. And the tax rate, we're going to be conservative again. We're going to put state and federal, 20% tax savings, okay? Some more, some a little less, okay, depending on your tax rate, again. But let's say 20% on average is your tax savings. When you look at that, this example gives you over $5,730 in true tax savings. True tax savings. And guys, look at what we did. We just did $1,200 for home related. One child. If you have 2, 3, 4 children, boom, multiply that. Your non-reimbursed medical costs, you probably have more than that. Okay, there. And it doesn't matter who's paying for it. Let's say you have a spouse and the medical goes on the other spouse's, job, and that's a premium. You get to write off all of that. All of that. We only use 10,000 miles, small business travel, and you still save $5,730 in this example as tax savings. I told you when you got on, we're going to show you $3,000 to $6,000, and we're very conservative in doing so. But let me tell you something. You do not have to wait until April the 15th to get your refunds. You do not have to wait until April the 15th to realize and see these types of deductions, okay? That's how we tell people that they can get Uncle Sam, okay, to pay for their home-based business. How in the world does that work, Terrence? Well, most of the time on your business, of course, you have a loss. You have a loss on your business on your first year. You know, you're putting out this, you're putting out that, you're traveling, things of that nature. That deduction that I just mentioned, that $5,730, if your business is a loss and you got the $20,000, you just increase your refund $5,700 and some dollars. Okay. You know, in tax savings, you just increase the refunds. We do that with actually several different clients. We actually look at things and stuff, especially that first year. They have major loss, especially with healthcare and all of those things happen because they didn't make $30,000 in that first year. Okay, they may have made $6,000, whatever it is. Okay, but they get to write off all this. But here's the thing: the IRS said that if you have a change in your tax situation, that you can go to your employer, to the HR department, whatever, and you can ask for a new W-4 form to be filled out. You know, that W-4 form was that form that when you got hired that you filled out that you said, I'm single, 1, married, 2, whatever it is, okay, and 0. You can elect to have that to be changed now. Why? Because your tax situation just changed because you have a business now. You have a business now. So when you look at that $5,730, that $5,730, when you divide that by 12, that's over $470, almost $500 that you may be able to, and some will, get it back on their paychecks now. That's what I'm saying. So individuals that can fit in that situation there, you can basically get money back on your paycheck because all you do is say, hey, I got a deductions coming in the year. Take out less taxes. So they get more money back, take home pay that they did before. Now, what would you do with it extra? What would you do with the extra $300 to $600 a month? With the extra $300 to $600 a month, number one, you can definitely get into your business. Okay. Number two, it's going to definitely or possibly save you more money per month than your business costs you. Okay. In a true home-based business, it's going to save you more money than it costs you. Okay. And, you know, it just makes sense. So is $300 to $600 a month enough money to work on average of 3 to 5 hours a week and keep good records that only take 3 to 4 minutes a day? Guys, the answers always range from yes to yes. Okay, for nearly everyone, $300 to $600 a month is far more enough to pay for all home business startup costs and ongoing costs. So when you look at that, your question right now to me should be, what business should I get? Because hopefully by now we did a good enough job to share with you that, hey, without a home-based business, you lose the money. But with the home-based business and with our guidance, that you can save a lot of money on taxes. Even if you actually said, oh, I might not have the startup right now, you just figure out a way that you can just actually say, you know what, if I change my exemptions now, if it fits and properly, I can possibly get more money back now on my paycheck so I can get in a business, so I can get into a business, okay? And the thing that I want you to know that the person that invited you on this call, the person that invited you on this webinar, however, you know, has a pretty good business for you. They have a business that they are already utilizing these deductions, either some of all of them, and they're learning more to utilize more of them. Because remember, I just showed you 6. I mean, there's 100 of them. So they're, you know, learning how to actually use more of those deductions. You know, we have calls for individuals to help them along the way to make sure, because we want to make sure that individuals are saving more than their business ever cost them. You know, so they have something that would fit this model. They fit the model perfectly. You know, it's very affordable to actually get in, very affordable actually monthly, you know, and you basically have an opportunity to save a lot of money in taxes. But I need to leave you with a fair warning. I need to leave you with a fair warning, okay? The cost of procrastination is huge. The cost of procrastination is huge, okay? Every morning, I want you to just think about this for a second. If you actually said, oh, I don't want to get in now, I don't want to call my friends back and get in right now. I want to wait. I want to wait next month. I want to wait till after the summer. I want to wait till after my vacation, whatever it may be. I want you to think about you doing this. I want you to think about every morning that you did not have a business, every morning before you leave your home, okay? I want you to actually, walk out into your kitchen, open up the window or open up your back door, and I want you to take a $20 bill, and I want you to throw it out of the window, and I want you to watch it catch the air and go into your neighbors, or watch it catch the air and go into the street. Watch it catch the air and go into the woods. Whatever's out there, it's gone. It's gone. I want you to think about that. Can you afford to take a $20 bill every single day and throw it away like that? Can you do that? If you can't do that, guys, you need to get into a business today. Why? Because every single day that you do not have a home business, you are throwing away about on average $20 in overpaid taxes per day. That's over $100 a week. If somebody gave you a $100 a week bill right now, you would just go nuts. I want you to think about it. Every day that you do not have one, you're losing $20. That's the fair warning. So again, I want to say, start slashing your taxes now. Do not wait another day to slash your taxes. We want you to keep more of the money that you earn. More of the money that you earn. You're working hard. Your family's working hard. Your friends working hard. We want everybody to keep more of the money that they earn. The person that invited you has an awesome business, that has an awesome, huge business, and all you have to do is plug into whatever that they're doing and start slashing your taxes now. Guys, my name is Terrence Hawkins. It has been my pleasure to bring this information to you, okay? If you guys need any help, any information, just seek me out and stuff, and we can help you to also slash your taxes now. With that being said, guys, we're going to end this webinar, and we talk to all of you soon. Good day, guys.